Okay, and welcome back, students who are taking financial accounting. In this series of videos, we are working on the Chapter 7 short exercises that were assigned in the digital study guide. Note, accounting is about understanding the concepts and then applying that understanding to the situation at hand. If you get the application aspect wrong, that is one thing and is easily remedied by watching someone else work the problem. However, if you don't understand the concepts, that is a whole other thing. Watching a problem worked out will not help you if you don't understand the underlying concepts. Go back and study the text material again and watch the theory videos. If you still don't understand the concepts, then either email or telephone an instructor to get help with that understanding. So now we're working on 7-13. And it says here, match the term with the definition by placing the corresponding letter in the space provided. So I have interest, note term, interest rate, maker of the note, maturity date, maturity value, payee of the note, principal and promissory note. Okay, so a written promise to pay a specified amount of money at a particular future date. Well, that's a promissory note, so that's I. Because you're promising to pay an amount at a future date. It's a written promise. It's a promissory note. 2. The date when final payment of the note is due, also called the due date, and that would also be the maturity date. So that's E. So let me erase that and go like this. So that's E. Right, the percentage rate of interest specified by the note for 1 year. That, of course, is the interest rate. The entity to whom the maker promises future payment is the payee of the note. So that's G. The period of time during which interest is earned, that's the note term, B. The amount loaned out by the payee and borrowed by the maker of the note, that is H, the principal. The sum of the principal plus interest due at maturity is the maturity value. The sum of the principal plus the interest due. So it's the total amount that needs to be paid back, the maturity value. The entity that signs the note and promises to pay the required amount is the maker of the note. And of course, the revenue to the employee for loaning money, the expense to the debtor, that's the interest on the note itself. Right, 7-14. Let's see here. Yep, we've got, okay, 17 problems. All right, so accounting for notes receivable. For each of the following notes receivable, compute the amount of interest revenue earned during 2014. Use a 360-day year and round to the nearest dollar. Okay. All right, so for note number 1, and I'm going to write these here, but and then I'm going to erase them. So pause the video if you have to and write it down, because like I said, I'm going to erase it. So I have $25,000 of interest, and that's at 9%, or I can write it 0.09 when I'm going to punch it into the calculator. And then that's for 11 months. And let's see here, 11 out of 12, well, 11 months, so that would be 11 over 12. Okay, the reason why I stuttered a little bit was because I looked up here to see the 360-day year. I don't have to worry, remember that's in days. So when we're looking at these other two here that have to do with days, we're going to use the ordinary method, the 360-day year. But because we're using months for these two, then we can just divide by the 12 months in a year. Now you can, obviously you can do the math one of two different ways here. You could take the 25,000 times 0.09 times 11, right? And that gives you 24,750, and then divide that by 12, all right? And that actually comes out to, come on pen, $2,062.50, and it says round to the nearest dollar, so it's 2,063. Okay, so that is the amount of interest on that note. Right? Now that's one way of doing it, and that's the easiest way of doing it, because remember, any whole number is over 1, right? And then this is just basic math. So if I have in the numerator, and I can write it like this. I have 25,000 times 0.09 times 11, and then I have 1 times 12, which is 12. Okay, so I'm multiplying straight across here, 25,000 times 0.09 times 11, and of course that gave me my 4,750, and then I'm dividing by the 12. That's the easiest way of doing it. All right. What I could have done, which is a more difficult way of doing it, is to take the 11 over 12 and turn that into a decimal. All right, come on, pen. I could have taken this 11/12 and turned it into a decimal by taking 11 divided by 12, and that gives me 0.91666, and that's a repeating number. All right, so as you can see, and then of course when you do that, you have to either write that down or put it into the memory in your calculator. It's, even though it's technically correct, all right, it's just much more of a pain to be doing it that way. So then I would take the 25,000 times the 0.09 times the 0.9166666, and notice, because you're having a repeating number, you're not going to have a finite number. It's going to be off by some sense to your actual answer. Now granted, this is telling us to round up to the nearest dollar, so it's going to become immaterial in the answer to the question. But just realize that if you decide to, it is just much more difficult to do these problems when you're taking in dividing the 11 by the 12, or the number of days over 360. It's easier just to go and multiply across the numerator and then just divide by whatever is in that denominator. Okay, so that's the end of number 1, and pause the video if you have to. Okay, number 2. Oops. Number 2, I have 42,000 times 8%, 0.08, times 75 days over 360. Okay, so again, here we're just doing the easy math. Is I'm going to take the 42,000 times the 0.08 times the 75, and that gives me 252,000. And then I'm going to divide that by 360, and that's going to give me $700. Okay, so that's the answer for number 2. So go ahead and pause the video. All right, number 3, I have 10,000 times 0.06 times 45 over 360. Remember, we're using the 360 because it's telling us to use a 360-day year. Okay, so 10,000 times 0.06 times 45 gives me 27,000, and I divide that by 360, and that gives me $75 in interest. Okay, so go ahead and pause the video. And so now number 4 is 125,000 times 0.04 for 4% times 9 months over 9 over 12. Okay, so when I do the math, 125,000 times 0.04 times 9 gives me, come on pen, 45,000, and I divide that by 12, and that gives me $3,750 as my answer to that problem. Okay, let's see here. Let's see what number 15 looks like. Um, da, da, da. Okay, I'm going to decide to pause the video here and pick up with this problem in the next video. All right. So if you have any questions on this previous one, all right, feel free to, uh, you know, go. Well, obviously, you need to go back over the time value of money, the calculations, how to calculate interest. Go back to the Math for Business and Finance, watch those videos. This should be second nature by now. But if you still are having a difficult time with it, feel free to contact an instructor.